welcome again to this episode of the Trade with Joseph Samuel Expert Academy. And today we're going to be looking at mitigation block. This is the 5 minute trading strategies. Like when I say 5 minute trading strategy, okay, it means the fact that because I think over the period of my teaching, I have not really said what I really want to communicate to you. It's really the fact that you can look at trade under 5 minutes and you can tell the direction and know where market is going to, and you pick your entry without no error or with minimum risk reward ratio. Okay, so that is what I mean by 5 minute trading strategy. Okay, but at the same time, even if you think it as a way that you can pick trade in 5 minutes, is still very true. Okay, because most of my entries are on 5 minute time frames. Okay, most of my entries are on 5 minute time frame. Only few ones are at 15 minutes and above. Okay, so for most of my entries are on 5 minute time frame. I always wait for confirmations on 5 minute time frame. All right, so let's continue. So today we're going to look at mitigation block and breaker block. Okay, I've said it earlier when I was teaching you PDRAs. I've mentioned it. Okay, so I believe it's not something new to you. So mitigation block is not something new to us. Okay, it's just the same way with other block, but both of them are failed order blocks. Okay, they are failed order block that did different things. Okay, when I mean failed order block, you will know that in a bearish movement, for instance, right? Let's take for instance, I have okay, let me just go like this. In a bearish movement like this, as I have this market price moving like this, right? Now I don't want market to come down like this, right? Okay, I want market to keep going, pushing higher. That was my expectation. But fortunately, our market that did like this, and you see market that come like this, and then come like this, right? Now, this type of market like this type of market structure, right? This video is not going to be so long because they are very simple strategies that you can, once you see them on your chart, don't doubt. There are things that I don't doubt. There are things that are just like this one are just free bonanza. Okay, but once you see them on your chart, you go straight to whatever you are, whether a bullish or a bearish movement. Okay, so now we know the fact before that here is the last red candle that was printed before an upside, right? We already know before that this here there's a last red candle here appeared before an upside, and that is our order block, right? Now this order block normally supposed to give us something like this. Sorry, minute. Normally this order block is supposed to give us something like this. I have this. Supposed to reach out here, right? And continue to the upside, right? Whether price will reach out there and continue to the upside, rather price did what? It breaks down, so it failed. So it becomes failed, right? Now it is now called a bearish mitigation block. Mitigation block breaker block rather. Breaker block because it has led to a break of structure first before it failed. Now, why a mitigation block? Let me delete this. It has led to a break of structure first before it breaks. This is what I mean by break of structure. It has first cut a high, right? Before the market started to come down. So where you are waiting for your entry is this. You are waiting for market price to come back to this block here, and you pick your entry. This is where you are waiting for you to pick your entry. Once you see back price like this, that broke down like this, you are waiting for market to come back to this block here, and you pick your entry for a sell. Those people trade patterns. They call it it's more or less like an M pattern formation, but we'll call it mastery M candle. I think I would do a short video on that. I think I'll do a short video on that. Forms of M pattern formation, mastery M pattern formations. Okay, but let's just see if I have the chance. I will definitely create a video on that for you. as a bonus. Okay, so this is a form of a hem pattern formation, but it's a breaker block, right? So I don't call it pattern formation really because we're not really studying pattern, but we're studying the formations. Okay, so now it breaks down. Market reach here, then you pick entry at this point. At this point. Okay, so why for mitigation block? For mitigation block, you want to see this instead. You want to see this instead. You want to see price. Okay, whichever way, as price is doing this way. Okay, you want to see price instead of the price to break above here. You want to see price failing to break, right? And then break down. When it breaks down, you are expecting market to come back to this place here because this is another block that was left. The last red candle here, another block that was left. You expect price to come back here, okay? And you pick sell here, then you go target downward. Now, this is what we know as a mitigation block. Sorry. This is here. Wait for price to get back here and you pick your sell. Okay, so that is your mitigation block. That is your mitigation block. That's the difference between mitigation block and what's it called? And breaker block, right? This is mitigation block. Market will fail to break high. Okay, market will fail to break this high and break downward. Okay, normally you already have a bullish movement now. The same thing with a downtrend. Okay, the same thing with a downtrend. For breaker block, or for mitigation block, either one. If I see price coming this way, okay, what happen is that the next one is I'm expecting the low to be broken, right? This market will break this low, but unfortunately this market refused to break this low. And what did it do? It decided to break high. Okay, in breaking high, I will be expecting market to come back to this place, to this last green candle here, right? And then pull up. That becomes my mitigation block. Mitigation. And if it's for breaker block, you want to see that it breaks down and then boom, pull up. It breaks it down. Okay, so that is a breaker block and mitigation block. So let's check them on our chart and let's see them so that we can actually know what we're talking about. So this volatility, this 5 minutes time frame analysis. So let's see here. Okay, so I'm seeing something interesting there. Now look at this. Let's study this reaction here. This box reaction, this short consolidation, you call it consolidation, right? So let's study it with it and let's see. Look at this market. Market was coming from here, break downward, fail to break this high, and break downward here. Now, this is the last up candle, the last green candle, right? That was to the push up. See how price came down there and respected it and break downward. Do you see that? Now look at the short movement here. Price did what? So that is an example of mitigation block. So this is a mitigation block here. But see what happened here. See price pull above this place, right? This becomes your breaker block. It pull above it. It pull above it, so we expect price to keep going. But rather, price did what again? Rejected below again. And see how price came into the zone again and pull downward. And as it pull downward again, see again that price did not break this high again. So this becomes another mitigation block. I hope you are seeing something very interesting here. And see how it breaks down again and see what price it again. Come down here, come back to the candle and do what? And break downward. And that is as simple as that. But let's see in a nutshell, if you want to use it in a more large zone, if I want to use it to pick large entrance, okay, maybe I need, because this is consolidation stage, so let's see more examples. Let's check on other trades. Let's check on other charts trades and let's see what's happening there. Okay. You are seeing this upward movement, right? I've seen this upward movement, right? Seen this upward movement, right? Okay, in the future, I can wait for price to come back here. Now you see, you tell me that I've not looked at overall trend. That you have not looked at the overall trend. And this guy is saying, he just telling me something. In the future, I can expect price to come back here. Remember when I was telling you PDRA, right? Remember when I taught you PDRA, right? I told you what are things to check out for, right? You remember? Do you remember? Okay. So we said that in premium, because it's a premium price already now. I've seen price taking above this high, and I'm seeing that okay, I'm already below discount, right? I can look for buy setup here if I look for my trend, but we're not in for analysis yet, so let's just go on. So why I just pick this mark out here because I'm seeing an hold high, okay. In premium, we said we look at for old highs, right? I'm seeing an old high here, valid, right? Okay. I'm seeing a rejection block here. I told you about rejection block, three pattern card formation. This one with the high, the middle one with the high Y wick, and this. I'm seeing the rejection block here. Are you seeing that here? Rejection block. And the third one again is I'm seeing a fair value gap. Look at here. Okay, I may never use here. I may try to use this upper one here, and here is a fair value gap. So I can use this smaller one here. Here. This is a fair value gap here. Okay, so this is a fair value gap. So in the future, I'm expecting the price to come back to this zone. I expect price to come back into this zone. Then I pick a sell from there. Okay, so I'll pick a sell, a short position from here. I'll pick a short position from here. Of course, I'll be targeting below the low, below this low. You tell me that I'm not saying any construction, but that is how simple it is. And my stop loss will be above the hold high or the rejection block. Okay, so let me even check. So we will check the overall trend and see what we are looking at for. Let's just check the daily time frame. Let's check from daily time frame. So here, okay, see sweet market here now. So this market now, you see that this market has broken the first structure, did change of character, right? It did change of character, right? So market is possibly coming into a institutional reference point, okay, on a daily time frame, come to a institutional reference point, and this is an institutional reference point. If the market refuses to break downward, we expect it to throw it back into this zone. Okay, trade back. Okay, all right. So that is what we'll be anticipating on V10 on V10. What's V10 Okay, V10 in the nearest future. So, but that's not a short sell because the overall trend is still bearish. Okay, all right. So let's go on with what we're analyzing so that we don't get carried away with analysis here. Okay, see 4 hours is very even sweeter. See now market is coming here, market has done this change of character here, and it has done a break of market structure here. So what are you telling me is that market VTEL1S is changing to buy side liquidity very soon. So for you to continue this sell side, I've got you the price action to this low of this liquidity void here, okay? Because this is a hold load that must be taken out, hold load that must be taken out if it continue to downside, okay? Market will first come back to my entry before continue downward again. But most on the overall trend, price is changing direction. So price may not come down to this low again, take out these lows again. It has broken structure here, so we are anticipating an overall buy to the upside to break this high. This is a sweet market for me to pick trade on. I'll be watching it. I will not overlook this market. All right, so let's continue our trade setup. All right, so you can see here now. See this market now. Okay, see overall trend now. See this market breaks down here, fails to go up, right? Now that becomes what? A breakdown structure. Are you getting it now? So what should I expect market to do now? See now, I've not even checked on 4 hours time frame before I pick that entry on 5 minute time frame. Now see now, what is here? What do you see here? Hello, what are you seeing now? You are seeing a mitigation block. This is a mitigation block. Price will definitely come back here to form a more of like M proper formation in the 4 hours time frame and then go short down. But look at it here. In 5 minutes, I only saw a rejection block, a hold high, and all of those our nonsense, right? So you can see how sweet is becoming. So that is mitigation block and breaker block. So let's see other examples on how they were implemented. Okay, see this one. I'm tempted to call this a breaker block just with the wick. You just pass the wick of the candle, but you see how price come into the zone again. But I don't want to really call it that because that's not really too valid. There are other information is there to look out for. Okay. All right, see this market now for down for bullish one. See this down market movement, right? Now price did what? Break structure. This was the other block. This was another block, and we expect this other block to do what? To break to the upside, right? But what happened? Price refused to break to the upside. Instead, it's reached here, and sorry, price refused to continue breaking to the downside, right? Okay, so price reach here and come down to this place. So you can see this becomes the what? The other block. So you see price, the mitigation block rather. And you can see what price did later in the future. You just take out this liquidity and you can see how price move. All right, so uh let's see let's see on 15 minutes time frame. Let's see if we have something sweet on 15 minutes time frame. Okay, all right, all right. So you see here too, you are seeing this one, sweet, right? So this is market break here, market here, refuse to break high and come down. So let's check on currency pairs and okay, let's see. Okay, okay, I think I see this one. Now look at market now. I'm not really seeing very clear pattern like that, but let's just see this market now breaks down. Market refuse to what? Break the high here, right? And break structure to the downside. It's still not a clear empire formation. Let me check. Ayé mi, but exactly okay. I think I like this. Bọ́lá fún ọ o Jésù. Let me clear this. Ẹ̀mí mi fògo fún ọ o Jésù. Ayé mi bọ́lá fún ọ o Jésù. ẹ̀mí mi fògo fún ọ o Jesus. Alright, so let me see. So we will see this one. This one is very, very clear. This one is very, very clear and vivid. Yeah, this one is very, very clear and vivid. So see market now. Market keep breaking high to the upside, keep break to the upside, right? Now this one breaks straight to this upside, right? But it didn't break down. Okay, now so see market now. See the market break here, fails to break here, right? And crash down. Are you getting me? And crash down. This was the last up candle here. See how market came down back into the zone here. See how market came back into the zone here and pull down. That is how you look out for your mitigation block. That's a mitigation block. Are you getting that? That's a mitigation block setup. Okay, let me see if I will see any other setup. Okay, let me leave monthlies. Like monthly is too won't make us to see large plenty datas. Ayé mi bọ́lá fún ọ o Jésù. It happens over and over again, so it's not what you will just need to struggle with. It's what you just to train your eyes to actually see those patterns repeatedly, repeatedly. I'm just trying to look for a very clear one so that you can see this is a gap. I think I will have to teach this topic too in this course so that you can know, because it happens more in currency pairs so that you can know where you see them. It's not this law is not really a very large gap. Market will definitely come and cover it up. That's the one for that's just the rule. Once you see something like this, let me just explain it sideways. Once you see something like this, it's not really a fair value gap. It's not a fair value gap. Okay. So once you see something like this is just a gap. You see market fail to pull price, deliver price effectively. You don't come here and say you want to come and pick trade from the middle. Like fair value gap, when we pick trade from the middle, we mark the high and the wick of the next candle and we pick trade. No. In this one, you expect the market to overall totally cover it up. Market dey come and cover it up. That is what happen in all of this market. You cover it up and look at this one now. We have a large liquidity void close to it, which tell you that price will definitely come and do this sell side imbalance. Price will definitely do a buy side inefficiency. Sell side inefficiency is buy side balance. So we will see it price coming back to fill it up, and you can see at least 50% of this liquidity void was captured, right? And what was captured here, so imagine, see what I'm looking for here. See this price. This was a breaker block. This is a breaker block. Thank God I even stayed here to watch. See this was the breaker block. This market led to the upside, right? You can see market consolidated, came down, right? After it breaks it, this was the last order block that lead to a massive pull up, right? So price came back there, and this was where price target. So for somebody who is trading USD at this also period, oh, it's not even still far away. This is 12th of July, right? 12th of June. So a person in June will have taken a shot from this end, right? Will have bought, will have made sell and taken good market. Alright, wow, and still selling. Jesus Christ, are you for real? Okay, so it's sold up to this higher before it has to do a change of character here, then break of structure to this upside. Then you see market keep moving the upside. So alright, so that is all on breaker block and mitigation block. You can go to your chart and look out for it. If you have issues, send them to the group. Send them to the group. We will definitely research. We will definitely help you to analyze the chart and give you good and give you more perspective about it, why you should look at chart in that respect and why you should not look at chart in that respect again. All right, so I'm seeing a mitigation block in this respect. Okay, price fails to break high, come down, and you can see price returning back to that zone here and strap down. So more like that. Really couldn't find so much. Well, let me just, but there are plenty on your chart like that, so you can use them. I trade synthetic more, so let me check through synthetic. I should see more of those patterns on synthetic. Let me check the 1 hour time frame for this market before we round up. Hmm. So market failed here, right? So price coming back to this place in later on. Okay, so price come back here and crash down. So come back here. Just we want to analyze on 5 minutes time frame, you can see it. So I might take my entry off to this, away from this point, and bring it here. Okay, it's still not close to my SL. So this 1 hour time frame, so it's still not entering my SL. My SL is still above the old high of the 5 minutes time frame. For all these places are liquidity, I might be trapped in. All right. Okay. Price didn't break down to structure. Break, break. Price came into this block here and traced downward. Okay, so all right, so this one now. See price here, break here, break here, break this low, right? Refuse to, okay, break this structure up again. Okay, we can't use that. We can't use that. We can use the lower one here. Right, the lower one here. So price here came here, right? Break structure, fails to break lower. Okay. And what happens? See price come back to this zone here to pick entry. So that is all. If you see this one here, break structure here, see price coming back to this candle, right? This red candle here, you can see price shooting up, right? The same thing applicable to this one too. So more or less like break other blocks, but they are failed other blocks. 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 Okay, let me check some of my charts analyzed if I will see someone's there. Let me quickly check something. Okay, so these are charts I've taken over the period of time. Let me see. Okay, look at these are sweet streets analyzed here. I'm coming. These are trades that I've taken before. So this is a trade. Okay, 300. So you see this trade, yeah, this V10. This was where it was before. This is what I use now. This was where it was before, right? This was where it was before. Look at this trade now. This V10. You can see it's on 5 minutes time frame, right? You see this market here. Okay. That's where it was before. Before I analyzed it and wait to see this market coming down here. Market failed to break the structure, right? Market failed to break the structure and broke straight to the upside, right? See now, look at this guy. This was the other. This was supposed to be an order block, but it's now a mitigation block here. Okay, so I have to wait for price to come into this mitigation block. And what makes situation block valid? Same thing that makes other block valid. It must have a fair value gap close to it. Okay, so when it has fair value gap close to it, it is very, very valid. So you can see the fair value gap I marked out here. And you can see this is the chart again. So you can see it now. You can see it. You can see the market coming into that zone, coming into that zone. It's coming closer to that zone. So coming to closer to that zone. I think um this this was this was 1 hour entry into the zone. I didn't screenshot the full chart. I think I have it here. Sorry, but that is how the market is. That is how the market plays out. That's how the market plays out. Okay, so this was another market, VIC-10 1S on 1 hour time frame. This market I made my entry on this market though because I watched film. That day I posted on myself that I watched film for get entry. Looking at this before now, I think I did it in two ways. I either deleted this one and pick it as here. Okay, this was the final. You can see the point at 8880. If we go and check this market now, VIC-10 1S, this market really bought like say tomorrow no day. So let me quick check it and use it to show you why I waited for this market here again. So this was the market again on 1 hour time frame. You can see this market was coming down, right? But what happened? This market fails to break lower. It fails to break lower. And of course, this becomes a order block or mitigation block or order block, whichever one you want to call it. But it's a mitigation block, okay? It has a fair value gap close to it, right? So as the market will come down here. So watch this market, watch this chart. I hope you are pay attention to this chart. So I waited for this market to come back here. Let me trace the chart. VT1S. Let me go back to my chart. VT1S. Okay, 1 hour time frame. 1 hour time frame. Let me see if I can pick that sector. Which day did I pick this day? Let me check the day. This day on the 8th, on the 10th of August, okay, 10th of August, right? On 10th of August, on 10th of August. So let me trace chart to 10th of August. Let's trace chart to 10th of August, 10th of August, 10th of August. Let's trace chart to 10th of August, VT1S. Okay, so this is the chart. This is the position. You can see the shape. You can see this shape. These are the trade. These are the trade. You can see this two red candle. You can see that this was the position I marked out, right? So the position I marked out for the market, right? For the market, I'm a day trader. I'm not a position trader. So for the market, so you can see how market came into the zone, okay, and what buyer. Okay, so on the second chart, I said I was looking for. Let me see it. So you can see here. You can see it here. So you can see it here, right? You can see it. You can see the chart, and you can see it in reference to this. So you can see the massive buy. It was not joke. It was not joke. So that's how mitigation block work for you. How mitigation blocks works for you. So as I started that market is coming down, market fails to break lower again, and I saw a favorite gap close to it. All I just did, I don't rush the market. I don't rush the market. I just have to wait for the market to come into the zone steadily, and you can see this market. Of course, I missed my immediate entry, but I think I still shop and small to no be small. So you can see this market buy for look at from 10th of August. You can see it here from 10th of August. You are seeing it here now. From 10th of August at 1 o'clock, 13:00, that's when it got to this point of I see what it bought to for good 2 days. For good 2 days, so this market was buying. And now see I didn't study analyze market, but see market now, see breaker block, see mitigation block again here. It fails to break high again. So as soon as I saw this earlier again, it fails to break high again. See market, break this breaker. I will just wait for it. See the candle here, this candle here. See price coming to the trap the week of the candle. I see market coming down. So that is how simple it is. And now I think I have another lookout for this V10 one because I think I took two analysis that day. I think I said I was looking at this 1 hour, see a lower low here that this market will say come back to this low. Looking at this because of the fair value gap, because see fair value, they are using the fair value gap here. This can't do, this can't do, and this can't do. These three can't do. There's a fair value gap that has not is not be fully mitigated, but price may take it out sha. So that is fair value gap, and that sorry, that is mitigation block. Okay, mitigation block. All right. So see you in the next class. Thank you. And practice, keep practicing. Practice, you master your eyes master all the concepts effectively.